Welcome to the fourth video of the series about Elliott wave, about the Elliott wave course I'm making. All right, so first three videos in this course where I was talking about the Fibonacci tool, right? So what is the Fibonacci tool, and then how we can use that extension, expansion, and retracement to measure these waves, right? Up, down, whatever. So we talk about that and we learn a lot about that, and we already know what the heck is that, right? Now we jump into the waves. So we're going to talk about this basic phenomena and then maybe the Elliott wave. Well, let's talk about the basic phenomena. What happened? What are these waves? So basically, so everybody knows that this is named by after the guy named Ralph Elliott, right? He's the one who discovered these phenomena. These Elliott waves happened in the stock market a long time ago, and based on the human psychology, that how human mind reacts to anything collectively, like good news or bad news, how people react all of a sudden at the same time. So after the study, he said, okay, this is what really happened in the stock market or any financial market, or in fact, any other thing that, real estate or anything else, you will find the same thing. This is based on the human psychology, basically, and it's in nature, right? So human mind is the product of nature. So it's there. So what it is, for example, we're going to talk about, let's say, a forex pair or gold or stock market or anything, right? So they are all, based on the good news or the bad news fundies, right? Fundamentals. We have a schedule. The news comes in and people react, and the price either goes up or down. So, for example, the price was up here somewhere, and then all of a sudden, bad news comes out, and then the price start to drop. So drop, 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 and then all the time the price has created after over the time, right? The chart create these SNR levels, right? Like where to stop. If it's going and then it stop to a level, and if it is dropping and stop to a level based on different factors. So, for example, any factor that the price stop here, right, and then that's it. Then start waiting for another news or another funding. So maybe a day or two later on, then all of a sudden you have a funding of this whatever it is, right? For let's suppose it's gold, right? So favorable news came out, and it comes out, and then the prices start to go up. So then the prices start to go up, and then again there is a resistance somewhere there, right? And everybody knows, and this is created by, of course, when the price is dropping, it drops and ups and down and ups and down, and makes the waves according to the fib levels and or previous highs and lows. So whatever comes in the way, then the price is stopped, right? As wave one, that is an impulse wave, which means that, or we call it a motive wave, right? What is the motivation? The news, the funding. So all of a sudden, good news, and the prices start to rise and to a level, right? We will discuss that later on. Then what is exactly that level? So and how to measure it. So we will learn that in later videos. But it's just the basic phenomena. So the price goes up and it is stopped. Why it is stopped basically is like, first of all, it's an SNR level. So what happened is that a lot of people who bought here, they are in the money, they're in profit, right? So when they see that the resistance is coming and the price may not go anymore to the upside, then they start closing their trades. This is what we call as a cash out, or take profit pullback, right? So everybody is taking profit, and the prices start to the buying pressure reduces, and the prices start to drop, right? So the price starts to drop, 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 and a lot of people think that the sellers are coming in, but they're not, because the news is good. Why anybody would sell that damn thing, right? At that point. So everybody's buying, and then this pullback, until you have a bad news, then just consider that nobody's going to sell it, and any dip is just a profit taking. And then after that, it will go up again. People will start buying again because the news is still good. The news is still working. Positive news. So usually the price comes out, let's say around the halfway. So for example, it goes from 0 to 100, the price will pull back to 50, around that, more or less, right? 61%, 50%, 78%, so, something like that. And that would create a wave 2, right? Then the price goes all the way to the upside, because now everybody knows that, yes, we are going to the upside. So a lot of people who were skeptical going in here in this area, now they want to get in as well. They want a piece of pie as well, right? So everybody going going long here, and then boom, the price goes up big time. And there's a certain level that, we measure with the Fibonacci too, right? And then when the target is coming, again, the same thing happens. Profit taking, right? So when people start profit taking, pull back. For wave 4, that would be wave 4 pullback, and we have a specific calculation for that, right? And then from there on, after that, and now so many years, right, decades and decades, then everybody knows that how much is the wave 4 pullback usually is. So when we reach to that point, everybody start to buying again for one more push to the upside for wave 5. And then once we reach to this wave 5, we have 1, 2, 3, 4, 5, then we know that the price will pull back as a correction. Now, as a correction, this is where the seller comes in. They say that, okay, too much to the upside, right? And the buyer's going to be tired now. They don't want to be coming in. So let's get in and then see what happens. And then slowly the seller will start selling. So the pullback, this is not the pullback. This is not profit-taking pullback. This is now sellers are coming in, buyers are getting off. So now this move is big. And this usually, wave A, comes around the previous wave 4 in the area, in the vicinity. Wave 4 is right here, right? So it will come, more or less around, equal and maybe double bottom here. This is the bottom and this is the bottom here. Maybe a little bit more, maybe a little bit less. The that would be wave A of the correction. And then again, sellers, right? Some seller came and then it says, okay, maybe the buyer will come in, then, just whatever the profit is, just take it and run. So they start taking profit and then price will pull back and then create this wave B. Now, since once we reach here and the news is bad as well, then the seller will say, okay, now we have the reason to sell because the news is not good. It's the bad news, right? And then they start selling here. Now, this is where you also see a head and shoulder pattern. This is a left shoulder, head, and right shoulder. A, B, and then the price will start to go down for wave C, right? And that would be just like this one, from 0 to 100, and the pullback is around halfway. Now, consider this is wave 1 in the bracket. Then this whole pullback would be around 50% of this whole rise. So either 61%, 50, 78%. We'll learn all of those levels in the Fibonacci tool videos, right? So this whole thing will be wave 1 and 2 on a higher degree or a higher time frame. For example, if you're looking at this 1, 2 black count, 1, 2, 3, 4, 5, then A, B, C, and this whole thing you're looking at on the hourly chart, then it is only wave 1 and 2 in the bracket, only wave 1 and 2 just like that on a daily chart. And then big from here, big wave 3 like this one will come from here to the upside. Consider this wave 1 and 2, and that wave 3 will be huge, right? And then you have sub waves within these big moves, right? Big waves. And then what we do is that we basically get in from these sub waves. What does that mean? That means that if you see that, okay, we drop, and we don't know if this is going to bounce or not, but you have a good news, right? So it goes up, and a lot of people are reluctant, and I am, and you are also reluctant going up. I don't know, man, it's going to go up or not, right? So we wait, and it goes up there, and then it comes down. Wave 2, wave 1 and wave 2. Now we see that it stopped here around 50%, maybe let's say 61%, most common area to stop, right? Now you start thinking that, yeah, it's a good news. It went up, it came down, not going down anymore. Let's see if it starts to go up again, right? So we're watching. So now see, this wave 1 has 5 small waves, 1, 2, 3, 4, 5. The same thing, wave 3 and wave 5 will have 5 subwaves, 1, 2, 3, 4, 5. Then wave 3 will also make 5 waves starting from this is small wave 1 and 2. So now this whole thing is 1, 2, and this is 1, 2, exactly like that. If you see that there is another wave 1 and then small wave 2, pull back around 61%, and then it start to go up, that's where we get in. That's where you should get in, right? It's a game. It's a patient game. A lot of people just, when they see that this thing is moving, they go along here only to find out, boom, they go negative, right? And then this thing start to go up, and then they'll go along here only to find out that this pullback will make them negative. So if you know it and understand and wait for the prey to come to you before you shoot, right? So wait and then see exactly this wave 1 and 2. You already know that this is 61%. Then don't touch it. Then wave 3 start to come, and then obviously the small wave 1 and 2 in a smaller time frame. Let's say, for example, if you are watching this on an hourly chart, then look for this wave 1 and 2 on a 5-minute chart, and you will find it. Right? So when you find that, you get in. And then according to this target on an hourly chart, you wait. That would be your target. You know, finding target, we're going to have another video about that. You have certain different factors, right? Maybe this wave 3 from here to here is 300 pip. No pair travel in 300 pip in one day, right? So what happens is that everybody, not everybody, every pair has like a daily range. Right? Daily range means that that pair, let's for example, pound USD, it moves certain amount of pippage from top to bottom in 24 hours. Average is, let's say, 100 pip, right? So if this from here to here is 300 pip, if you get in here, then don't expect that you're gonna get the target of the wave 3 in one day, because the pair doesn't move that much, right? So what we do is you get in proper way. I use my strategy, my system, Magic Ivy system. You all know that already. All the trades are on my website. You can see how I get in, right? So you get in, and then based on the daily range, maybe you want to get out here, and then leave it for the next day. And then you see next day again it's going to the upside, but then it dips a little bit and then gives you a long setup. Take it, and then go to the upside. But then you see then wave 4 is finishing the third day, and then start to go up, get in if you find the setup, right? I do not open the trade unless I have the setup. So this is how you start trading this wave 3. Now, if you look in this 1, 2, 3, 4, 5, let's say on an hourly chart or daily chart, these waves, simple, subwaves, wave 1, wave 2, they could be like hundreds of pips, right? So this is how, if you keep an eye on these bigger wave, then even if you dip, this is dipping here and this is dipping here, right? Going down, this is a correction. Within this big wave 3, you will be aware of that, and then you will not go short. Even though if you find some good short opportunity, it says, what the hell with it? I don't want to get in, because the overall, the picture is showing the long side, and then the trend is up, and I will go long once the move makes the turn to the upside, right? So this is how systematically you get in, and then when you get to very close to the target, then you close your trade, long trades if you are in, and then wait for this pullback to finish, wave 4 pullback. And then same thing, wave 5 is starting, you wait for small wave 1 and 2 and get it. For wave 3, then wave 4, wave 5, and you can hold. It's not that, my thing is that I daily basis I get in and get out, because I know the daily range and all of that. If I see the daily range is done, I close the trade. Sometimes what happens is that I make the move, the daily range is 100, 120 pip, but the pair, some reason, didn't move that day, and it only moved 40 pip. That says, what the hell with it, I'm sitting on the break even, and let's see the next day it will go, and then try to finish that daily range, and that usually 90% of the time that happens. right? So I hold maybe 2 days trade, but not more than 2 days, right? So 90% of my trades every day, get in, get out. 10% sometimes I hold for the next day if my entry doesn't move much, around 30, 40 pip and stop, and then I see the daily range is not done. So either my SL is going to hit at break even, or I'll catch up the next day range, the whole thing. 40 pip, let's say, for today, and then 100 pip for tomorrow. That go, 140 pip trade. That'll be a good job, right? So this is how it is. So now going to the upside all the way and then coming down, then you wait. A lot of people make that mistake as well, that when they see and then calculation there is a resistance, says, okay, it's going to make the turn, and they go short only to find out that wave 5 turning to be an extended wave, and it's on and on and on and going up and up and up and up. And people, I see all the time, and they start adding the position to short while the prices keep going up, and the account is gone. So that's a bad habit to do, right? So if you think that there is a top reaching, wait for the confirmation if it is going to go down, if it start dropping. My confirmation is that in Elliott wave perspective, I have other strategies, but Elliott wave, what I would do is that I will wait until, hold on just a minute, I see something happen. What the heck? All right, my charger got messed up a little bit. So so from the top, so I will wait until this wave A and B is finished, and then head and shoulder pattern in place. That's okay, no problem. And usually that happens in a half a day or a day, right? So just wait, just move on to some other pairs to do something else, and do some other chores around the house, right? And then come back and see that, okay, that's what it's. And then try to trade this wave C. Again, the same thing. You already see that it dropped, it went up, and now it's going below this high, and then giving you small time frame. You have an entry, you go short, and around 50%, 61%, or 78%, wherever the daily range is for that pair, close the trade. All right. So this is how it happens all the time in all the time frame. You will see in everywhere. Sometimes what happens is that the waves are so complicated that you cannot find it, right? And do not force it. The conventional way that people teaches, and I learned that first, and then I found that that's a very dangerous thing to do, is that they tell you that start from the 5-minute and then move your way up. Like first find the Elliott waves in 5 minutes, then go and see that what happened, and then 1 hour, and then 4 hour and a daily. I don't like to do that personally. My main charts are the weekly charts. I do my analysis on a weekly chart, and then it says, okay, this is where the trend is, and this is what the chances are that this thing is going to go to the upside, and which wave we are in. And after that, I will go my way down and then pinpoint that where I can get into the move, which is the bigger time frame. For example, if the daily is showing that daily candle drop, and then after that it's a bullish reversal candle in place, I know that it's gonna go up now. So even though if I see that on an hourly chart or 5-minute chart giving me a short setup, I'm not gonna take it because the daily is ready to go up. So I will wait until my my system, my strategy gives me a long setup in a proper time, in a volume time. It's a lot of different factors. We're going to talk about that later. And then you go in with that. And then I try to find that on a weekly chart, most of the time, I can tell you exactly. Well, once you learn, you can tell, you will have the Elliott wave count, very easy, right? So once you pinpoint that, okay, we are in this weekly or daily or 4 hour, okay, we are in the fourth wave to the downside. The trend is down, we are in the fourth wave, fifth is about to start, and then you prepare yourself to get into the wave 5. All right, so this is how we're going to do. We're going to check first the daily chart, then I'll show you the weekly chart. Sometimes I'll look at the monthly as well, right? But weekly is enough. weekly chart, then daily down to my 40-minute chart. My 40-minute chart, my strategy, my Renko candle style, right? It is as good as a regular 4-hour chart. Let me show you something here that I have. I think I have it open. See, for example, this one. This is yen index 4-hour chart, right? Perfect Elliott wave count. You can see that this is wave 1, ABC, wave 2, right? We will see the measurement and all that in the next video. Then it went up, straight up, and then see that going to the upside. Well, this is what I was talking about. In the same chart, even though you will find a smaller time frame, you will find the entry here. But even in this one, this is where you want to get in. You see that after that, it went up, came down, says, okay, now it's going to the upside, or this one, this pullback, you get in. And you know that this thing is going where? For wave 3. Wave 3 is almost like 1.618 of wave 1. We will learn about that later, right? In different videos. So once you know the target, you can take this one, you can take this one, you can take this little entry here from a 5-minute or 1-hour chart, right? And you move on. Then this is wave 4 correction, and you know exactly how much is it, so you wait until then again it goes up, down, and this is where you get it. This is like, okay, now we're going for wave 5. I predicted that systematically, and it is going exactly like that. Now, this is the regular candlestick, right? Look at the chart that I have on my Renko candles. How beautiful is that? This is what it is. This is one. This is let me see. This move A, B, and then it start from here 1 and 2. This 1 and 2 is this 1 and 2, and after that, beautiful wave 3, wave 4, wave 5, ending wave 3. So this is wave 1, wave 2, wave 3. I'm expecting wave 4 to the downside, and you can see that the price is dropping right now. You see that? So it is very, very clean and clear. If you have clear waves, then follow it. If you have something really messed up, like pound Aussie, pound USD, if I look at the 4-hour chart, I get dizzy. It's so drunk right now. It's up and down, left, right. God knows what's happening, right? It's a tornado there. So, leave it alone. We don't want to deal with that right now. We have better things to do, right? So once these things, and especially these indexes, charts, right? They're like yen index so far, for example, and for that matter, even USD. This is a 20-minute chart, but forget about that. I don't have the counts over there. So now this one, for example, that's clear red, right? So now it's going to drop. That means that yen is going to get strong, and you have 7 pairs. Now 7 pairs, and they will anything at least 2 or 3 will give you a short setup, easy, for 100 pip each. Get those trades, simple as that, right? So for example, this was a beautiful setup going to the upside. Red candle turned into blue, and I knew that there's a wave 4, 1, 2, 3, 4, and after that, I made the chart. I gave it to my subscribers, and I had like almost 15 trades. This thing from here to here, it went from here to here, and I had 15 trades in yen pairs. They are all on my website, by the way, and my videos you can watch. I take the trades and I keep that on the platform. I do not close the trade until I first record the chart with the trade on, with the setup. All of my trades, you will see, it is according to the setup, nothing random. I don't see that, oh, it's dropping, let me open the trade here. No. If I do not have a proper setup with 4 conditions, I do not open the trade. So these wave counts and harmonic pattern, for example, let me show you this one. It's not that, but I have different study that I'll do, right? For example, the same chart, I have Elliott wave count, perfect count, but within this, right, we have another study called harmonic patterns, right? So within this, if you can see this chart, you probably not be able to see that where the heck those harmonic patterns, right? But what about this chart? Now this was a girdle. I didn't even make it this one here, but if you draw the fib here, right? You see it's bouncing from, not girdle, but kind of, right? This bouncing from 61%. That was a pattern, but not an official pattern. But this is a bad pattern, official pattern. This is a butterfly. It turned into a butterfly. And now, see, this one is the current chart, by the way. And this, I made the chart and I gave it to my subscriber. that if this hold here at point C is going to drop towards point D, and look what happened. It is coming down there. Coming slowly, right? So this is how the Elliott wave comes, because I also know that this is wave 5 is finished. This could be downside A, B, and then C, right? Look at this right here. Wave 5 is finished. Now it's coming down. So maybe this is wave 1 and 2 of that wave A. Let me go and take a look here. See this wave A? Gonna be 1, 2, 3, 4, 5. So don't we have, do you think that we have probably wave 1 and 2, small, right? Then wave 3, wave 4, wave 5. That would be wave A around last wave 4. Then it will go up for wave 2. Then it will come down for wave C, A, B, C. Not, sorry, this it will go to for wave B. The correction is in A, B. Correction is always, we talk about correction in alphabetical, not numbers, but alphabets, right? And the impulse wave in numbers. So this would be 1, 2, 3, 4, 5. Then AB, small ABC, finishing wave B. Then 1, 2, 3, 4, 5, finishing wave C. Right? So, and the same thing, I applied that is steady, this is steady, you know, the harmonic pattern, and this both, and SNR level. And then once you have that, what's left? That's a piece of cake. Cake is ready to eat. Okay. And it's very sweet. So learning all of this is going to make you, you know, you have no idea. By the time you finish the course, this market will come under your feet. Trust me. Right? You will walk, you know, like you're walking in a park. You will know exactly which way you are, which wave you are in, or which, you know, up, down, which pair is going to go where. All you need that is just the fundy to come in the same direction, positive or negative, and then boom, that happens. All right. So this is what the basic phenomena is. In the next video, we will start that what is wave 1 and what is wave 2 and what kind of what style wave 2 comes in and what are the measurements. And then how we can judge wave 1 and 2, what the heck is that, and what is to come for wave 3. Okay, so I'm going to leave this video here now, and at least you understand the basic phenomena. This what happens: 1, 2, 3, 4, 5, A, B, C. You wait for if price dropping, then it's making the turn. This is what happens. Dropping also, it's like 1, 2, 3, 4, 5, right? So you going short. You know, you short wave 3 and you short wave 5 already. You made it, and then it's making a turn. Then again, you wait for 1 and 2, and then wait. Trade this wave 3, trade this wave 5, wait for A and B, trade this wave C. Right? This is the beginning. After that, like me, you will trade everything. Okay, you will trade wave 2, 4, whatever. But these, you know, it's very complication in this wave 2 and especially wave 4. The wave 4 turns, most of the time it turn out to be very, very complicated wave. So I'll teach you exactly what are the different style it comes in, right? And what we call it, how you measure it, and how you can take advantage of it. But I would, you know, rather tell you that, you know, first you practice to wait for wave 2, 1 and 2, trade wave 3, trade wave 5, wait for A, B, trade C. And then after that, you know, your way up, right? But this is how you should be doing it, right? So I'm going to close this video here and then start making the next video about wave 1 and 2. All right. So bye for now, and hopefully start talking to you in the next video. All right. Take some time. Don't watch the next video immediately. Go out there, walk around, you know, eat or drink something, right? Then relax a little bit, and then comes back, and then because this thing needs some, you know, real focus. Okay. So refresh yourself and then start the next video. All right. So bye for now and talk to you soon.